So, welcome back, guys, to Coffee Cafe. So, what we did last was we did our lasting adjustment trial balance trial. Oh, I can't talk today. Our last adjustment entries to wrap up the rest of the period. So now we are coming to the conclusion where we've already posted to the journal, we already posted to the ledger, and we actually successfully completed all 4 forms. We completed the income statement, right? We got a $1,000 profit, 1,000 or 1,500, close to $1,500 profit. But however, when we did our equity, we took too much money out of the company to actually get us a loss. So what happened was we had to decrease the value of our company by 1,500, bringing our total now value of our company to be down to 28,000. All right. We completed the balance sheet. All right. Our assets does in fact equal up our total liabilities plus our new equity, our newfound new equity. So we're good there. And of course, our cash flow statement of cash flows, as I said many times before, I will never balance this. So I am okay with that. So again, this statement of cash flows, I wouldn't say it's like the most important financial statement. It does exist because what this really breaks down and truly tells a person or an investor or someone who's a shareholder is how much money is actually going into the company. Like, what is the actual worth of the company versus what it is projecting to be, right? Because again, we have that assumption is if you do accrual accounts, did you actually pay off all your liabilities? Did you actually collect all the sales that you claim you say that you had? No. So the whole purpose of this is how much actual cash is flowing into your company. So I don't think it's that important. So the last thing that we have here is our post-closing trial balance. But before we can even do this, we need to take our first necessary measurements and close out our books. So you guys can see my screen, correct?
Yes.
All right. Oops, sorry. I'm hitting the wrong buttons all day, everywhere. Okay, so in order to close out and properly close out your book, so when we get to our last page here in our journal, again, we are going to skip this little section here because that's definitely not enough space. And we're going to go start on a clean page for 21. So as you guys remember from our lesson, first step is you're going to close out all of your revenues to the income summary. Now, what does it mean to close them out? Pretty straightforward. You're literally going to go to every single account in here that is currently having a balance and you're going to zero them out. So in this case, our normal balance for our revenues is a credit. So what we're going to do is we're going to debit all of our revenues and credit them into our income summary. Now, let's point out a few things. So here are revenues. We're going to debit our revenues and we're going to credit all of our expenses. So with that being said, and we're going to place it into our income summary. So for those who have their chart of accounts, let's go ahead and tell me what account number is your income summary.
$39,999.
$39,999. So it's one of the very last accounts that's going to be located in your equity account. Okay, so that's just something that we're just going to keep in mind. So again, as I said this before, you are going to zero out every single revenue account, and we're going to debit them because we're zeroing them out. So let's go ahead and get started. So in our journal, what's the first thing we're going to recognize? How are we going to zero out our sales for regular coffee?
We haven't gone over this yet, right? At all. Like this is brand new.
Yes.
Okay. So I was gonna go to my review sheets because I'm like, I don't remember this.
I don't either.
Oh, okay. So yes, we did the lesson last week on Thursday.
Okay, then I'm gonna go to
Chapter 13.
Yep.
Yeah, so here I too have the review sheets. So I shall also too go into the last thing. Okay, so again,
Sorry.
no worries. Okay, so you're primarily going to be looking at the first review sheet for here.
It's 12, 13. Okay. So it says that's the trial balance.
All right, hold on. Let me actually pull up the actual the actual PowerPoint, so you can actually see
The flow.
Yeah. Because this one I pretty much just did a summary.
Right.
So here is the actual flow. So once we've completed steps, we're on, okay, before that. So step number 9, closing out the book. So what you're going to do is, again, for all your revenues, you're going to zero them out by I don't know how to explain it, but by zeroing out the account, essentially you're going to, if it has a credit balance, you're going to debit for the equal amount to make the balance reflect as zero. Okay, so for your most of your revenues, they are typically credit balances. So we're going to be debiting it, and we're going to debit it into an income summary account. Then the next one here is we're going to close out all of our expenses, which they typically are debited. So we're going to credit all of our expenses. Okay, and we're gonna debit them all into the or we're gonna credit them all into the income summary. So by looking at that, this is what you're supposed to be doing. How in the world do you zero amount? You're literally going to journalize every single one, and you're going to debit all of your sales accounts, and you're going to place them into the income summary. Same thing with your credits, right? If you have a depreciation expense or rent expense or things like that, you're going to credit them and you're going to place them into the income summary. Once we've done that and post it to the ledger, okay? So what I'm going to do is I'm going to do it simultaneously, posting to the ledger and posting it to your journal because we're already there. And then so by doing that, we're going to have some kind of either debit or credit balance in the income summary. Once you've done that, you're going to either debit or credit into the equity. So you're going to close out the income summary to the equity account. Okay?
Okay.
So looking at this example, let's go ahead and start with our first one. So we're gonna start with our revenues.
Okay.
Okay. So what do I do here?
It's gonna be sales, regular coffee.
Yeah. See, and this is why I was telling you, you cannot copy and paste this because you're gonna miss an account.
Right. Okay.
So you're going to have to go through every single one. Sales, regular coffee, account number 40050, and how much am I going to debit this account for? I want my account balance to reflect as 0.
Hang on, I gotta go back to it. Here on the ledger. Okay. So it's gonna be the 1,046.22.
1,046.22. And since I'm already in my ledger and I'm at my journal, you could go ahead and just enter in the post-closing right away because I'm already here. And I'm already finding out what the balance is, so might as well come and clean it up. So what I'm going to do is I'm going to type in closing. Okay. General journal number 21. And I'm debiting my account for the 1046.22. So that should bring my account balance to 0. Okay. Right. So what's my next account going to be?
What was this?
Oh, you're doing the formula?
Oh, it told me I had it wrong. Hang on. Sorry. Okay.
All right. So
The next one.
mm-hmm.
So then it would be sales dash Supreme Coffee.
Mm-hmm. Count number 40100. And how much am I going to debit my account for to make this balance 0?
1,097.25.
Yes, 1097.25. So then I'm going to enter that in right away. For the 10,097.25 to bring now my account balance to 0. Okay. What is after my sales for Supreme Coffee?
Sales ceramic mugs.
And how much am I going to be debiting this account for?
$1,524.39.
1524 30 1524 39. 1524.39 to bring my account balance to 0. Right. Next one I have
Sales medium. Yep.
40300. For what amount?
$5,221.76.
Yeah. 522176. So I'm going to come here. 630. Closing. For 522176 to bring my account now back down to 0. Okay. And then, of course, I don't have large regular coffee, but what about the next one?
Sales medium supreme coffee. Uh, 40450
Mm-hmm.
is the account number. And the amount is 665577.
65577. Okay. Six six five five. Oop. 655 bringing our total balance to now to be 0. So this is closing out the accounts. We're just zeroing them out essentially. So then when we start the next period, it's going to be giving us another projection of how our sales are doing for the next month. How about sales returns and allowances?
Account number is 45,000.
But how are you going to zero this one out?
Oh.
In the credit.
You're going to
The credit.
credit. Okay, so hold
So it's gonna be the
on.
next.
Yes, it's going to be the next portion. Yes, good. So we're going to hold on for now, and we're going to see if there's anything else that needs to be debited. So here's our sales returns allowance. That's a credit. Sales discount is also a credit. Delivery income.
Is gonna be a debit.
Yes, delivery income is going to be a debit, and interest income is the last one. So here we're going to go ahead do delivery income first, and then journalize the rest as credit. So delivery income, account number for 8,000. And how much am I going to debit this account for?
210.
210. Okay. So for $210. All right. Once you finish that, go ahead and now we can start journalizing our credits. So I'm actually going to work going from up to go backwards. I'm going to go up one. So my first one's going to be a sales discount. And it's going to be credited because in this one, we debited the account. So now in order to close it out, we're going to credit the account. And how much am I going to credit my sales discount for?
$907.87.
907.87. Okay, 0. And then last but not least is going to be my sales returns and allowances. And for what amount am I going to do my sales returns and allowances?
1996.
1996. All right, so I'm going to come here, finish up, and close out all of my revenues. So closing. General Journal 21. Credit for 1996. Bringing my account balance to now be 0. Okay, so let's double confirm that we've cleared out everything here. Nothing there, nothing there. All right, and then where do we credit this, all this revenues out to?
Income summary.
Exactly, we're going to place them all into income summary. Income summary, which is account 39999. All right, and we're going to go all the way to our equity account to find our income summary. Okay. So again, how to do this is you're going to pretty straightforward. Again, your debits and your credits are going to balance. So if you would like to calculate it, we're going to total up all the sums. Okay. All right. So okay, so how so go ahead.
Right.
Yeah, I balances.
Okay. Did Michelle, did you balance too?
So I'm just, where did you guys get the number for the income summary?
I just added up all my total debits and subtracted the 2 credits up here
Two numbers, yeah, the other two.
to find the difference.
Oh, okay.
Yeah.
Okay.
Yeah, because the rule is they have to balance, right?
Right. Okay. Okay. Yep. I got it.
Okay, so 14,827.56 is what you're going to place in your income summary on the credit side. So here you're going to place in the income summary, and I'm going to say close out revenues. Okay, general journal number 21, and it's for the 14 $827.56. All right, on the credit side, making that have a credit balance of the same exact number. Okay, so our first section has been completed. Okay. Now, I'm going to be telling you this. The next section, I don't think you're going to have enough space. You can try if you'd like to squeeze it all in here, and I'll let you cheat a bit by adding extra lines in there. But I can tell you now, I don't think you have enough space. You're going to barely cut it off. And plus you have to add your description here too. I mean, it's pretty straightforward what this is. You're obviously closing out your books, but I'm gonna make a note here. Just close out revenues to income summary. All right. Again, it's up to you. What do you guys want to do? You guys want to try and squeeze all your expenses here? I can tell you, you don't have enough space. Or do you want to go to the next page?
That's fine.
You can go to the next page. I don't care.
Okay, perfect. Let's go to the next page. So page 22. So this one, obviously, you're going to black this out because you definitely don't want people to add something in between. But I'm going to, yeah, I'll do that right now. So let me take a quick few seconds to go ahead and draw my line in there. All right. Insert. Oh, wrong one. Insert shape. Oh, wrong. Oh, shoot. I hit the wrong one. This was hit shape. Shape. And I want a line. Okay, there you go. All right. So again, same date, June 30th. Now it's time to close up all of our expenses. Okay. So most of our expenses, as we know, all have debit balances. Okay, so let's go ahead and go through each and every single one. So cost of goods sold is first. Okay, so we're going to close out all of these to what?
I'm gonna close them out to
Credit.
We're going to credit them, but what's our debit?
Oh, sorry.
for the is it just going to be the cost of goods regular copy?
Oh, okay, so so that's going to be our credits, right? My question is now, if I'm going to be crediting all of our cost of goods sold and all of our expenses, where am I going to be placing them in? Like what account? What's my debit account going to be?
Let's see here.
Where am I zeroing out all of my...
Capital
Yes.
contributions.
No, not capital contributions. That is you investing your own money into your company. Yes. Okay, income summary. So if you guys are
Oh, still income summary. Okay.
yeah, it's an income summary. Yes. So we're going to zero out all of our expenses into the income summary. All right? Income summary is just basically another fancy word for pretty much a placeholder for your profit. Okay? So whether you made a profit or a loss, that's what the income summary does. It's a placeholder for you to zero out all your revenues and expenses to get your profit and either hold on to it or you can reinvest it into your company. Okay? So another fancy word for income summary is if you're working at the corporate level is retained earnings. Most commonly, a lot of people recognize this as retained earnings. Okay? That's all that is. And we already know that this account number is the 39999. We don't have a balance yet because we don't know what it is. We got to zero out all of our cost of goods sold first. So the first one that we're going to do is as a credit because we have a debit balance is going to be our cost of goods sold for the regular coffee. All right. And how much regular coffee am I going to credit?
$839.20.
Excuse me, $839.20. All right. I'm also going to come here since I'm already in my ledger. And I'm actually going to say closing. General Journal 21. And crediting $839.20. Bringing my account balance to 0.
And it's General Journal 22.
20. Oh, yeah, you're right. Thanks.
I'm sure I was like, what? I just changed it.
Okay, yes, we just changed it. Thank you. All right, good. Next one.
Cost of goods clean.
And what is our amount in our cost of goods sold for Supreme Coffee?
$879.61.
$879.61. So that is what I'm gonna paste in my ledger. Bring my account back down to 0. Next one.
Cost of goods sold ceramic coffee mug.
Okay, cost of goods sold.
And the amount to credit is the $959.70.
$959.70. Zero. Okay. Next, we have our cost of materials. So I don't have small cups, but I do have medium cups. So how much is going to be in my cost of materials for small cups?
$286.70.
$286.70. 0. Good. No large coffee cups, but we have sugar. And how much are we going to do this sugar for?
Sugar is $21.60.
Cost of materials, sugar. Account number 51300 for $21.60. Okay. And then lastly, in our cost of materials, we have our coffee creamer for how much?
$195.96.
$195.96. Oh, shoot, I hit the wrong one. So, this is $21.60. Whoa. 0. Okay. Let me know when you all get here.
I'm done.
Yes, I'm there.
Okay, perfect. Now that we zeroed out all of our costs of goods sold as well as our cost of materials, we're going to go ahead and move on to our expenses. Yay! So, first things first is our advertising expense. We got to zero that all out too. So this is what I mean that we wouldn't have enough space because we have a lot of expenses. Okay, so what you could have done too is you could have separated them, but it's just let's not waste any more journal space. So first one is advertising expense.
$185.
Count number 60,000 for $185. Okay. Come here to the actual ledger account and actually close it out. Okay, 0. All right, what's next?
Next we have bank fees.
Yes.
Okay, what's this? 60100 for how much?
$291.23.
291.23. 630. Closing. For 291.23. Making this 0. All right, what's next after that?
Business expense.
Business expense. For 6,200. For how much?
$12.82 and 78 cents.
78 cents. Okay, $12.82.78. $12.82.78. All right, my window's too small. $12.82.78. Just double verify that my journal matches my ledger. And what's after that? Freight expense. Do we have any freight expense?
No.
No, it's been zeroed out, so we can skip that. What's next? Insurance expense. $6,400 for
195.83.
$195.83. 630. Closing. General journal number 22 for the 195.83. Zero. Okay.
Labor expense.
There's nothing there.
Oh,
Okay. However, what do we have in our subcontractor expense? So in this case, you can't use main accounts for this one because, again, we want to close out every single account, and especially for our main accounts. I mean, for our sub accounts, you want to make sure that you go actually physically in each account and zero them out. So in this case, main account, we didn't put anything in there, so nothing there. What about the subcontractor expense?
Is $1,890.
Is it TOR? Yeah, subcontractor expense. 6510 for 1890. Zero. Yeah. What's next after that?
Temporary labor expense.
Was 6520.
And the amount is $252.
252. Oh shoot. 252. Zero. Good. And what's after that?
License and permit expense.
License and permit expense.
For $375.
$375. 630. Zero. Right? What's after that?
and disposal of asset. For $2,000.
For $2,000. Got it. Zero. Okay. And what's after that?
And then we have office supplies expense.
Okay.
$6.
6:30. Closing. Journal number 22. 70. Bringing that to 0. Almost done, guys. Payroll expense. Obviously, we haven't done that one yet, but what is the breakdown for payroll expense?
We got the salaries and wages expense.
Okay. 6810.
The amount was $884.
884. To 0. Okay. What's next after that?
Commission expense. What was that?
31022. Zero. Okay. What's after that?
Payroll tax expense.
6830.
97.98.
Sorry, I made a typo somewhere. It's 9798. Okay, so I'm going to come over here. 630. So here the typo's up here. So 6. When we do payroll, the 28. Okay, so closing. Journal number 22, 97, 98. Making my account 0. All right, what's next? Purchase expense, anything there?
Nope, we already did it.
Yes, our returns and allowances, purchase discounts. Next one after purchase expense is going to be rent expense. Zero. All right. Any travel expenses? No, not that we know of. Utilities expense? Absolutely, we haven't incurred any. So
Debt.
we have bad debt expense. Okay. Last two accounts, depreciation and amortization expense. So go ahead and fill those in. Five, 8, 6, 9, 3. 5, 8, 6, 9, 3. And then lastly, my amortization expense for the 1167. All right. So is everyone here?
Yep.
Yes, sorry.
No worries. Okay, so now that we've completed zeroing out every single expense account, what you're gonna do is you're gonna total all of them to find out how much you're going to be debiting your income summary for. So equals sum.
$13,332.52.
All right, so go back to your little equity account over here and place that information in your little income summary. and tell me what your balance is.
Oh, wait. Where did you go? Oh, gotcha.
Oh, man. Oops.
Okay, so let's see. Oh, wait. I didn't do that yet. 14.95 and 4 cents.
Where have we seen that number before?
That was our ending in the other thing, on the financials. I can't remember the name of the form, but
It's important that you know which form it is.
let me look. I have it right here.
The income statement.
Yes, if these numbers match, then you did your accounting correctly. That means we successfully closed out every single account properly. We credited all of our expenses properly. We debited all of our sales properly, and also whatever contra accounts we've credited as well. So good. That means we are at a good sign here. We match our profits, so our profit and loss income statement matches our income summary. So, what happens next? What are we going to do now? Well, let's finish up our little thing here saying,
I was moving my formula. I was in the wrong one, but I had it in the opposite column for the 14. Um, and I'm sorry, what was your question?
so the question is, what do we do now?
Now we're going to debit the income summary and credit our equity.
Now, are we going to credit our equity? Yes, we are, because we have a profit. So let's go ahead and journalize that first and then go ahead and proceed to continue the rest. So we are going to debit our income summary and we are going to credit our owner's equity account. Okay. And how much are we going to debit our income summary for?
The 14 or hang on.
That's right.
14.9504.
14.9504. Yes, we're going to zero out our income summary and we're going to place it into the equity account. So good. There you go.
Hold on, I was still typing, sorry.
14.9504. Okay. So did you got both of you guys finish the journal?
I am putting my closing out of equity underneath right now.
Oh, yeah, I didn't.
Okay. Okay, so
Sorry.
nope, that's good. And then once you finish your journal, go ahead and post it to the ledger. So I zeroed out my income summary and I'm going to place it into my equity. Okay, is everyone ready?
Uh-huh.
Okay. So now, what is the new balance in your equity?
$31,495.04.
Good. Now that does not match your statement of equity because we have one more account to close out to equity. And what is that?
Uh, did the owners withdraw?
Correct. Owner's withdrawal. So you have to, we're going to owner's equity. We're gonna credit. We're gonna debit our owner's equity, and we're going to credit our owner's withdrawal. Okay. So 30,000. I think owner's withdrawal is 32,000. Yes. And it's for $3,000. Okay. Okay. So again, if you finish your journal, go ahead and place that information into your ledger. So here for my owner's withdrawal. Ooh, these things gonna go through. Owner's withdrawal. I'm going to close out to equity. General journal number 22. I'm going to be crediting my 3,000 to bring my balance to be 0. And then I'm going to come back up to the top and debit my equity account. And since I'm debiting my owner's withdrawal, okay, my new balance is going to reflect what?
$28,495.04.
And that's exactly what you solved for in your statement of equity. So do you see how everything ties up together? And you could see how there are things that line up and match. So that is what happens at the end when you close out your books properly. So that's the last thing that we're doing with our journal. So you can save and close that. And yes, so now that we closed out pretty much all of our stuff, all we have left is to do the post-closing trial balance, which I'll continue when we come from the break. So right now it's exactly 2:40, so we'll stop here, and we'll continue at 3.
All right, I'll be right back.
See ya then.